Okay, welcome back. This is the fourth and final video on the 2010 ordinary level cash flow statement, and we're going to tackle part C of the question, which if we look at it down here in the "you are required to" part, it says first of all you need to calculate the net debt for the 31st of the 12th 2008 and the 31st of the 12th 2009, and then reconcile the net cash flow to movement in net debt. So the first thing to say is that this is an older question. In the newer questions they just ask you to reconcile the net cash flow to movement in net debt, but when you are doing that you're creating a reconciliation statement, and included in the reconciliation statement is the figures for net debt for 31st of the 12th 2008 and 31st of the 12th 2009. So you're always doing that anyway, even if they don't ask you specifically to do that. So in this case, just for this question, all I'm going to do is answer part C2, and in doing so I will have calculated the net debt. I'll have completed the part 1 also. Okay, so the first thing to note is this is the second reconciliation statement, and the reconciliation statement has a title, and the title can be gotten just by rewording the question here, where it says reconcile the net cash flow to movement in net debt. You just change that to reconciliation of net cash flow to movement in net debt. So again, just change the first two words and you have the title, and I've written that up here for a start: reconciliation of net cash flow to movement in net debt. Okay, so no need to write it off, or to learn it off by heart rather. It should be in the question every time, just reword it slightly. Okay, the next thing to note is reconciling net cash flow to movement in net debt. It's changing the net cash flow figure to the figure for net debt is what we're doing essentially. So it means we're starting with the net cash flow figure, and we get that from the previous part of the question that we did, which, if we look down here again to the cash flow statement that we completed, we have increase in cash, €4,000. So that is going to be our first line of this reconciliation statement: increase in cash, and it's going to be €4,000. Okay, and it's plus €4,000. If it was an increase, it's a plus. If it was a decrease, it's a minus. If it was a plus in the cash flow statement, it's a plus down here in the reconciliation. Okay, and if it was a minus, it'll be a minus. Next thing is the cash to repay debentures. So we get that from back down to our debentures here. It has in the two balance sheets, debentures went from 80,000 in 1 year down to 50,000, which means that we repaid some of that loan. We owed 80,000 1 year, and then the following year we only owe 50,000, so we repaid that loan. Now in this question, if we repay a debenture loan, we put in the amount that we paid back, which in this case is 30,000. We put it in as a plus in this reconciliation statement, even though if you remember in the cash flow statement it went in as a minus. There we see the repayment of debentures. Okay, because in the cash flow statement it's all about money in and money out, and if we repaid that loan, that 30,000, that was money going out, and we treat it as a minus. Whereas in this case we're talking about essentially we're trying to figure out what the debt is, and if we repay some debentures and we consider those debenture loans as minus figures, well, if we repay some of them, then we're saying that we have less minus figures, and that's why we're putting this in as a plus. So basically, if our loans go down, then the cash for debentures figure is a plus. If our loans go up from 1 year to the next, then the figure in here in the reconciliation statement would be a minus. Okay, so the next line then is just to tot up whatever the total of these two figures is. They're both pluses, so 34,000. Okay. Next thing is the net debt 31st of the 12th 2008, and we calculate the net debt at ordinary level. It's essentially just whatever loan you have outstanding, and in this case it's debenture loan, and it will be in all cases really debenture loan. Whatever loan you have minus any cash you have in the form of cash on hand or cash in the bank. So if we look at the balance sheet for 2008, if we're trying to find the net debt on the 31st of the 12th 2008, we have a debenture loan of 80,000, so we consider that like we're minus 80,000. And then we have cash in the bank of 25,000, so we consider that like we have plus 25,000 cash. So that minus 80 and the plus 25 gives us a total, if we add them together, of minus 55. So we put that in over here as our net debt on the 31st of the 12th, minus 55,000. Okay, so that's us calculating that net debt figure for the 31st of the 12th, 08. Then all we do is we add that to the figure beforehand, the change in net debt. So it's 34,000, that's a plus, and a minus 55,000. When we put them two together, we get in total a minus 21,000. And we're done. The only thing though I would advise at this stage then is to double check this minus 21,000 figure. It's a bit blurry. Double check this minus 21,000 figure by going back to your balance sheet and calculating the net debt for 31st of the 12th 2009 from the balance sheet. So if we go back here, in the balance sheet for 2009, we see the debt is 50,000, so we consider that a minus 50,000, and the cash then is 29,000. We consider that a plus 29. So plus 29 minus 50 gives us minus 21, which is what we got over here as well. So we're happy with that.